I'll talk about anything that's random that matters to you. And in today's video, we're actually going to talk about an AP News article that I saw. Diners are skipping restaurants and making more meals at home as inflation trend inverts. So what exactly does that mean, guys? Essentially, people are getting poorer. People are choosing to essentially stop eating out at restaurants, and they're going to start making meals at home because it's cheaper, guys. People are being affected left and right, and they can't afford necessarily to eat out all the time. So in this article, it tends to essentially divulge more. So it says right here, you can read this. It's a tongue twister. Eating in is in, and eating out is out. Okay, New York AP. That's the message that inflation squeezed consumers have been sending to fast food companies and other restaurants. Meanwhile, food producers are benefiting from more palatable prices in grocery store aisles. Right here, inflation has been easing broadly for more than a year now, and it's cooling faster for grocery items since the middle of the year. The current trend marks a reversal from previous years when grocery inflation outpaced restaurants as food producers raised prices, as often fattening their profit margins. The shift, and here's a good one right here, guys. The shift has been weighing on McDonald's, Olive Garden owner Darden restaurants, and similar chains. So that's interesting. Right here, Orlando-based Darden, which is like, I guess, the parent company, guys, that owns Olive Garden and a few other chains, I think. I want to say they own Longhorn, too. Correct me if I'm wrong. But, and then it discusses, again, Orlando-based Darden reports 1.1 sales drop at restaurants open for at least a year, guys. The decline was more severe, 2.9% at Olive Garden's chain. July was especially weak. So what does this mean? It pretty much is that people just can't afford to eat out. I mean, when you start calculating the increase in, eating out, and then the tax, and then you start coupling that with essentially having to tip, it's like a double-edged sword, guys, because I know the servers, they need to be tipped. But at the same time, like, people, when you go out to eat, right, and you essentially go and buy your food, you have to pay a 20-25% tip, which, again, I know the servers need that because that's how they make their money. But I mean, on a family of four, going out to Olive Garden is going to cost you probably $80, if not more, depending on what you order, plus a 25%. So you're walking out of there at least spending $100, guys. It's pretty wild. So in this article, it talks about more, guys. Like, for example, like, eating in is in. Inflation is easing at a faster pace for dining in at home, prompting consumers focusing more on grocery aisles and less on fast food. And then right here you have the year-to-year CPI change for food at home and food away from home. Food at home, food away from home. And you see that, guys? You see that? The blue line is food at home. And then the red line is food away from home. They're both declining, really. It's interesting. So on that note, I have another article I want to talk to you guys today about. Let's see here. This is from USA Today. Okay. The title of the article is that cereal box getting smaller? Welcome to the bewildering world of shrinkflation. What is shrinkflation, guys? Essentially, shrinkflation is when you buy a box or you buy an item of something, right? A bag of chips. It could be a box of cereal or grits or granola. It could be a loaf of bread. I mean, everything is getting smaller. So companies do this, right? Because they're trying to essentially save money. So they're trying to keep the box or the package the same, but meanwhile, what they're trying to do is they're trying to, with the inflation cost, because inflation is not just to the consumer. These companies feel inflation too, so they have to keep paying their employees and stuff. So to keep everything balanced out, they just put less product in the container, guys, and they sell it to you for the same price. So you may think, oh wow, yeah, well, it's gallon of milk or loaf of bread's only $2, but in that loaf of bread, they're actually giving you less bread, right? Or in that bag of chips, oh, the bag of chips is only $5, $4. Yeah, but they're putting less and less chips in those bags. And they have to do that to combat inflation and to compete on the market because there's other competitors as well. If they keep putting the same stuff in those containers, the same amount of product, you're going to see prices go up dramatically. So it's just a way to hide the inflation, in my opinion. But in this article, it just goes and talks about is your breakfast table getting bigger, or is it that the cereal box is getting smaller? ? And it says welcome to the bewildering world of shrinkflation. Rather than raise the price, grocery companies put fewer chips in the bag, or fewer flakes on the box, or less peanut butter in the jar. Shrinkflation is a retailing strategy that goes back decades, but it has captured the public imagination this year. President Joe Biden said he'd had enough of shrinkflation in a February Super Bowl ad. Cookie Monster and Muppet went viral in March with a tweet that proclaimed, "Me ate shrinkflation," and Biden echoed those statements with the better grammar. In his State of the Union address. All right, guys. So pretty much things are getting more expensive, and recent polls show that American consumers are increasingly aware of this practice. And while hate might be too strong a word, they are not pleased. In a survey published last month by the personal finance site Empower, 79% of consumers opined that there are less chips, cereal products in a bag than there used to be. Wow. And then right here, a global survey by YouGov released earlier this year found that 72% of U.S. consumers have noticed shrinkflation in few products. And then this third point right here, a third survey reported that in May by the industry publication Chain Store Age, found that 81% of American consumers were aware of shrinkflation trend. So guys, it's we're in interesting times here, because when Congress and the government decides they want to print money, guys, it affects everything in life. I don't care what these people say. It affects everything in life. You're gonna feel the inflation somehow. It's not gonna go away. So, essentially, you're gonna have to figure out, how you're gonna deal with the inflation, right? And I talked about this before, but really, it's all about making more money, guys. You're gonna have to make more money, because in the future, guys, things are gonna get more expensive. They're gonna continue to be more expensive. I've talked about this before. I mean, these things aren't not going to go away, right? I mean, we're going to continue to see the inflation, shrinkflation. Here, look, it's true. Shrinkflation is on the rise. Shrinkflation is indeed on the rise. The Labor Department tracks product downsizing. Their data show shrinkflation is more common now than in the peak pandemic years of 2020, 2021. But here's an important caveat. Shrinkflation was at least as common in some pre-pandemic years as it is now. Guys, look, it's not going away. You're going to have to figure out how you're going to deal with it. All right, let's go into another article here. Let's see here. The cost of living crisis looks like around the world. While the global economy is predicted to have a soft landing, people keep saying that, countries like Sudan are facing cost of living catastrophe. Yeah, I mean, look, here's the thing, guys, is that people think that, okay, well, United States, like, we're going to get a soft landing, the economy, we're not going to get a recession, blah, 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 blah. No, if we get a recession, other places get a depression. If we get a depression, other people's countries, they get wrecked. I don't know what's worse than a depression, like all out fallout, who knows? But yeah, in this article right here, the cost of living crisis is now a familiar phrase as prices of everyday goods have increased dramatically in recent years. In the U.S., prices remain high while consumer prices have been increased around the world. 2. With the average global inflation of 6.8% in 2023, it's much higher, guys. This means that food, energy bills, and rent are still getting more expensive for everyone. Guys, I mean, I don't know how else to say it. Everything is going up, right? Why do you think certain things are happening right now around the world? Is it a major distraction? Is that what's happening? There's a distraction occurring because they have to, you know, distract everybody from the reality that things are getting more expensive. Yeah, I don't know. Some people are in denial, but all right. So, but while the global economy is forecast for a soft landing in 2024, they say soft landing, guys. Countries with the IRC works, like Sudan, are facing a cost of living catastrophe. So I guess a catastrophe is like above. Well, it's, I guess we'll for this video we'll say like recession, and then like depression, and then catastrophe. That's what we'll say, okay, in this video. Catastrophe on a whole different scale, guys. A year since conflict began in Sudan, the economy is on the brink of collapse, and spiraling prices for food and basic necessities are further contributing to the world's worst humanitarian crisis. This is not cool, guys. This is really bad. It's people just aren't, you know, it's not that people aren't making as much money as they used to, because, I mean, a lot of places, you know, are still, you know, developing countries, they have a strong demand for labor. It's just the cost to operate is going up. So, let's see here, guys. And then in this article right here, this is my last article for the day, guys. Well, for this video. Right here it says, stock market today. Dow up 250 points. S&P 500 hits record high after upbeat economic data. This is follow all the latest U.S. market action on Thursday here as of September 26, 2024. Pretty much, it's just showing you guys that everything is starting to kind of go up. Up 0.6, SPX up 0.1, Dow Jones up 1%. So, yeah. Pretty much, guys, because they essentially dropped rates, now you're starting to see the stock market rebound. If this isn't like a pure indicator, guys, of like everything is controlled, the market's controlled, then I don't know really what is, honestly. I mean, the market, you know, is controlled by interest rates and by the, you know, by inflation, guys, essentially. So, and that's what these people, that's what they do, right? They shake everyone away. That's how the rich get richer. They just jack up the interest rates and then lower the interest rates. They jack up the interest rates, they lower their interest rates. And that's the way you can that's pretty much how you manipulate the economy, the market, guys. You know, but like I said, this is on marketwatch.com. If you're interested and you want to check out this article or read it more, you can. I just wanted to cover this as a closing article because pretty much, guys, like, it just shows you that everything's being manipulated, and essentially we have no control over anything. So on that note, guys, like, follow, share if you can. Subscribe. My channel's new. I'm trying to grow my channel, so I'd appreciate it if you can give me a subscription and you know, subscribe, like, follow, share, and I bring content to you guys every day and sometimes twice a day. So I appreciate it, guys. Like I said, and I'll talk to y'all in the next one. Peace out.